warm welcome and good afternoon to everyone joining us online. I do know that we do have the graveyard shift, but I mean, we have a very important topic to discuss with you guys today. So please be engaged, and this is, your time to ask questions. We have a great panel on the stage today, so please ask questions, as much questions as you can. So what we'll do is I'll go through sort of the Sasol funding offerings, and then I'll give over to David to take us through an exciting initiative that the IDC is launching, and then we'll go into our panel discussion. So in terms of Sasol and basically addressing the funding need of the SMMEs, we have 3 funding vehicles. So we have grant funding, which is available for suppliers, or non-Sasol suppliers rather, up to 100,000. But you must be part of the ESD development journey to be able to access this type of funding. And really here, we are funding you to acquire tools, equipment, technical accreditation, software management programs, just to get your business up and running. And then we also have a TISIS fund, which looks at purchase order funding, which we have found has been a great need for SMMEs. So we've partnered with TISIS to offer this on our behalf up to 250K. Then we have the SIACA fund, which is the ESD fund at Sasol. So the SIACA fund offers from 250K to limitless, really, but based on your business case. And SIACA fund does asset financing. We do loan consolidations to free up your finance, and we also offer working capital finance. And how you can access the SIACA fund, it's at www.sasolsiaca.co.za. So in our previous sessions, we do have questions around, do I qualify for the funding that you guys offer? So I'll just zoom in today on the SIACA fund, just high-level qualification. So we fund entities that are South African registered entities. We also fund at least 51% black ownership. We're also concentrating on EMEs and QSEs, so your turnover must be below 50 million. And then on point 4, we also find entrepreneurs with knowledge and skills to operate the business. And really what we mean here is we want you to be involved in your business, and we want you to have the knowledge on how to basically operate that business. You must be an economically viable business, and also you must be linked to the Sasol value chain, because we're also trying to transform the supply chain. So we want whatever you're doing to be part of our value chain, so that you could also be, scale up. And then what to expect. We also do get questions around, what is the process with SIACA? So client application, basically that's on you. You can apply for a SIACA loan via the SIACA website on the linkage platform. At this stage, high level, you are giving us your business case on what is the problem that you want to solve. You will remember one of the speakers earlier spoke to what is the problem you want to, even in your pitch, what is the problem that you're trying to solve? In funding as well, what is the problem that you are solving, and how can we assist you? Then we'll go through sort of a document validation process. So here, because we are NCR and registered and we are regulated, we have to do credit checks. We have to validate your company documents, tax clearance certificates, and look at your historical financials. I'll park that one because I think that should come through when we're talking with the panel later on the document requirements, to access financing, and how this can actually become a problem for businesses. Then we develop a business case. Another question that we get a lot is around what interest rates do you offer? So we do prime minus, but it is based on your credit scoring. So again, your financial documents must allow us to assess your risk. Then we look into your financial projections, and we then build a business case. We then this would go through then for committee review. So we have 3 levels currently at Sasol, and then we disperse the funds to the supplier. And then we don't just leave you hanging after funding. We also do provide post-investment monitoring. And this really is important because you know, it's one thing to just fund someone and then they have problems later on and you can't address them. So we try to walk the journey with you, give you the money, and really provide you with that support. I'll give over to David to take us through his slide, and then we'll get into the panel discussion.
Thank you, Yonela, and good afternoon, everyone. I think when we think access to finance, I think it's such a common phrase, you know, and especially amongst our small and medium-sized enterprises. To access finance, we know is a significant challenge. And IDC really looked at it and said, how can we assist in unblocking that hurdle to support, to grow, to develop small businesses, you know, to become viable and sustainable, and really get them to last, because we see small businesses don't last. You know, if a small business celebrates 3 or more years, it's a significant achievement. And we came up with this model after our experience, lots of research, you know, and part of our research showed that corporate South Africa spent between 25 and 30 billion a year on enterprise development programs, on corporate supply chain programs, etc. And when you drill down, you try to understand what's the impact. Can we really see some of the impact? And there's very little to show, you know, for some of them. And we had to say, but this cannot be the norm. You know, we cannot continue on this vein and expect, you know, to see different results every year. And what we've realized is that in order for us to grow SMEs, we have to partner. We need to build strategic collaborations with corporate South Africa, with financiers, with funders, with those that provide business support, technical support, mentorship. Because what we've picked up in our research is that everybody's doing their little thing, tick off a box or some sheet and submit it somewhere and move on with their core business. But at the end of the day, it's not really making the impact that we are all hoping it would do. So we've designed a very simple model, and it's really simple. It's got 3 levers. It's dealing with the issue of access to markets. It's called the Sme Connect Model, and it's a strategic collaboration model. So the first thing we're looking at is how do we collaborate with corporate South Africa, with state-owned entities, to open up the market side for small businesses. We met with them. We listened to them. And a lot of them is worried, and they said to us, we give a corporate or a small business an order, but they don't deliver for various reasons, mainly for 2 things. They can't get finance to deliver on that order, and if they do deliver, the quality is compromised, or they are late, or various reasons. And we said, let's deal with that issues. So access to markets is where the corporates will come in and open up that markets for smaller businesses, etc. The access to finance is where us, the IDC, various other financiers come on board and say, within this model, there's a market now that has been established. How do we work with, let's say, a Sasol in growing, developing their small businesses, their QSEs, etc., so that they can eventually be sustainable and create more jobs and make the impact that they are making. And that's where the IDC and other funders are then called in and partnered to support that. But for me, the third lever is probably the most critical one. And that is what we call business development support. And for some reason, this is always put at the back burner, called non-financial support and what. But it's such a critical component in the SME space, in growing and developing SMEs. You can have the contract, you can have the money, but that doesn't guarantee delivery. It doesn't guarantee the quality, etc. So we said, let's look at this business development support. It's more than just developing a business plan, but it's really about small businesses. In our research, we found that to comply is quite a costly exercise. And they have to comply to certain regulations to be able to supply to Sasol. You know, there's specific requirements. And for them, it is costly. And we said, no, we need to lower that burden. We need to lessen that burden on our small businesses. And that is why we have a grant support program there to help them with audited financials if the financiers wants it, to help them with SABS approval, ISO certifications, whatever is required for them to be compliant, to deliver that product, the quality, the standard, even the packaging. We had one client out in the Western Cape who was supplying a Messmart group, and they had to change their packaging. And that's for, say, no, we just need a different packaging, but the cost associated with that. And then the second portion of it, it's really the technical support, technical assistance, bringing in an expert to work with the small business, to grow them. Not a consultant, and apologies for the consultants, but really an expert. So if it's somebody in the energy space, let's bring an energy expert who can assist them with the manufacturing process or the supply process, getting finance, opening up markets. And that is this model. So here we, for instance, would partner with a corporate. So it's not a general initiative. So if we partner with Sasol, we will work with Sasol to develop a group, and we do that for many corporates so that we can identify, grow, and develop our small businesses. So that is our solution that we are putting forward as the IDC. It's recently been approved, it's fresh off the market, and it's something different that we need to do. We cannot be doing the same things over and over again, and then we expect different results. And this is what we're hoping will make the impact and the difference in this space. Thank you, Yonela.
Thank you so much, David. I think it's really exciting. Now to the exciting part, which is the panel discussion, access to finance. So we'll start off with our panel and just talk. I just want you guys to just ponder on this thought around funders are saying there's funds. SMMEs are saying we can't access finance. So surely there's somewhere we are not meeting each other. We are missing each other, somewhere. And I do think that, it's not one-sided. It can't just be the SMMEs. It can't just be the funders. So as you just, I'll start with you, Amina, as you just also just explain to us your environment and then just ponder on that thought around where are we missing each other when it comes to this.
Sure, not a problem. Thank you, Yonela, and thank you to the panel and the viewers that are watching. I think one of the, I work in an environment where we work with startups, and we take startups from ideation and help them achieve product market fit. We also work with startups who help SMEs. So most of our startups actually develop solutions, funding solutions that are geared to assisting SMMEs. I think one of the challenges in the space is the credit scoring mechanisms that are available are very much traditional. Yeah. So you don't find that they meet the requirements of what's in the market or what the challenges that our entrepreneurs are facing. You find entrepreneurs could be blacklisted because a business that they ran 5 years ago did not work out. And now that then prohibits them from getting traditional funding. So we need to look at what data we're asking from them. And also working it back, being customer-centric, understanding what is their journey, what is the data that they need to collect in their business on a day-to-day basis, and how do we bring this into alternate credit scoring mechanisms. And some of the startups that we're currently working with do this, and an example of that is Creditize, and another example is Funder, where they provide capital to businesses that have a turnover of 30,000 Rand per month, and only need to be in operation, not even operation, just have to have owned their business for 6 months. And particularly in times like this where we're facing a pandemic, you don't necessarily have those 3 months of records available because maybe the lockdown, maybe the rebellion almost that we experienced also impacted trading. What happens then now when you want to get your business up and running and you need that working capital tomorrow? Going through a bank, you're not going to be able to do that because you won't have those 3 months of data required for you to access that funding. So I think I'll touch on that one and then leave it to the panel. But alternative credit scoring mechanisms are definitely needed in order for entrepreneurs of all sizes to access funding.
All right, thank you so much. And then, Hlonela, on the same sort of topic, but if you can just touch on, because you have quite a broad overview from working with government and private sectors and being an SME yourself right now, if you can just take us through that.
Okay, thank you, Yonela, and thank you to the panel. You know, the space of SME development is quite interesting. As you mentioned, I've been in this space for about 18 years now, starting with the Department of Trade and Industry, moving to CEDA and chairing the board of CIFA, and lastly in corporate at Anglo-Zimele and at Barloworld. And now I'm completing the cycle because I'm running my own business advisory for small businesses. So I can talk through the various aspects from different angles. What's interesting to note is that in the South African economy, there's a gap of about 240 billion rands between the supply and demand for funding. So there's a mismatch. So it tells you that the question you're asking about the fact that financiers are saying, here's the funds, but SMEs are saying, how do we access them? So often you find that the funds that are available are not talking to what the SMEs are trying to resolve. So there is a mismatch there. And often you find that, for example, it's mentioned that there's 5.8 million SMEs in the market, 5.8 in the South African economy. And this is now the stats that was out last year in February by the Reserve Bank and the World Bank and National Treasury. Only 50% of that are accessing the funding, and they will tell you, SMEs will tell you that it's daunting to come to these institutions, it's overwhelming, it's complex, and there's just a mental block around approaching funders because they see it as a waste of time if you do not have networks, and it's intimidating, so to speak. So there is something about this mismatch. And I see corporates like Sasol as game changers in this respect, because your DFIs that fall under government, as well as your traditional banks, they've been in this space for a long time. But I think corporates, they cover all the three aspects that are important to SMEs. They have supply chain, which is your procurement opportunities. They have funding, and they also have business development support. So there is a lot that corporates can bring to the fore by changing the game, and also by becoming an embedded part of the SME ecosystem.
Thank you so much, Hlonela. So I'll go into our next question. But I do hope that you guys are asking questions online on Slido. We will check on your questions. Please, when you ask questions, if you have a question, a direct question to one of our panelists, please just mention their name, and then we will direct that question to them. So the next question is just around funding solutions that are available there. So one of the issues that has been raised is really the fact that, SMEs don't know where to go. They don't know what funding solutions are available. So they don't know between short-term and long-term PO funding, all these fancy things, equity. So they don't know what type of funding is available for their businesses. So I'd just like you guys to go into that conversation where we talk about what is these different types of funding solutions that are available in the market, and how in your spaces also you've seen that we're trying to then address this funding gap. Over to you, David.
I was hoping I wouldn't be first. Thanks, Yonela. For me, I always say we're trying to fit a square peg into a round hole when it comes to SMEs, and specifically the smaller and micro type of enterprises. Because when it comes to funding solutions, we expect them to conform to a funding solution that is actually geared to larger sort of corporates. And Hlonela spoke to it's so cumbersome. They are intimidated by what is expected of them in terms of information, the hoops that they have to go through, etc. The credit scoring models that are being applied. And it's really, I mean, we know what products, I'm not going to zoom into the products. When we design solutions for smaller enterprises, we really need to look at solutions that are fit for purpose, because their circumstances, how they approach business, and the stage of where they are in their business cycle needs to be recognized and acknowledged. And that is why, from an IDC perspective, we said, yes, there's the industrial finance, and we need to continue building that. But if we want to go into the smaller business space, we need to think out of the box.
Yeah.
Hence that model to say, we need to partner. We need to partner with corporate South Africa so that we can grow, put our resources together. You know, let us de-risk those SMEs that we consider as high risk within this SME Connect model, so that when they go through a credit scoring model, the risk has been mitigated to an extent that they become bankable. And for me, that is it. You know, it's really thinking outside of the box and not try and let them fit or conform to the traditional type of funding methods. And it has been proven. You mentioned Funder and those fintech type of solutions. It's there. And their success is built on exactly that. Don't try and come up with traditional methods and expect them to conform. Thanks, Yona.
Thanks, great answer. Hlonela, your thoughts on the matter?
Yeah, you know, now running my own business, it means I had to knock on the same doors. You know, where I was sitting on the other side of the table. And I can tell you now that even for corporates that I've approached, they tend to follow the same pattern of your DFIs and your traditional banks. And the reason is because these are shareholder funds. But on the other hand, I think there is something to be said about making sure that even the application forms themselves, I was filling them in and thinking to myself, oh my goodness, is this what we were putting SMEs through to fill in these forms? And if you are a startup, you need to have existed for a year because they need that track record. Then if you are looking for exorbitant amount of finance or loans, they're looking for that collateral. So there is funding that is available, but the problem is accessing it. And also, I think there's an overkill in terms of just the requirements and the forms that people need to fill in. That's why, for example, SMEs are saying, I would not bother, I better, use my own investments or borrow from family up until I'm at a point where I'm growing my business. So there's a gap for startups. You find that funding is only available for SMEs for growth funding rather than for startups.
So true.
Yeah.
Yes,
Yeah, that is spot on.
that's true. What are some of the things then you think could be cut out in the process? What are the things that you have seen, now being on the other side, that you thought were necessary when you were, the funder, but now you're an SMME? What are some of the things that could be cut out, but we could still reach the same sort of outcome?
I think one of the most important things, David, you spoke about business development. I cannot overemphasize that. Funders like the IDC, for example, or your NEF, or your CIFA, and so on, they've outsourced the mentorship or the business development because it can't be run internal. But I think that that is not used to its fullest because those mentors and coaches, those are the ones that should be used to coach SMEs for networks to start off with. And secondly, to build a rapport with these DFIs, because the nature of the relationship between SMEs and funders is transactional in nature. It's never about that client journey approach for SMEs, which is why I thought corporates are game changers in the sense that the very same SMEs are benefiting from their supply chain. So the kind of relationship has to be intimate and it has to form that rapport. So these are some of the lessons that I think for the whole SME funding ecosystem we need to think about. The use of mentorships, right to the filling in of forms, because they have a relationship with the funder on the one side and a relationship with the SME on the other.
Okay, thank you so much. Amina, your thoughts?
Yeah, I think just to add to that, I really like the idea of what you mentioned around mentorship, because I think it's a collaborative effort between the SMME, the mentor, and the corporate, or even accessing funding. And I think the reason we ask for so many documents is most funds or investors are risk averse. They have to manage their risk. But what could mitigate that is actually milestone-based funding. And to do that well, you actually need to be understanding what's happening in the business and whether those needs or those milestones have been achieved. But also, sometimes those milestones won't be achieved because you're still an SMME. You're having your challenges, and why aren't those being met? Maybe it is a funding issue. Maybe it's because you don't have the right operational system in place, or your financial management system is actually not giving you the insights in how you need to be managing your cash flow. So I think that if we took a lens of saying, up front, we like what your business stands for, we understand the problem statement that you're trying to solve for, we see the traction, let's see what it would do, what it will take if we give you just a small contract or a small piece of the pie. Deliver on this, and as you start to deliver on these multiple contracts over a period of time, we will then unlock further funding. The challenge with that is you do need the capacity to be involved in that process, to walk that journey with the startup or startup or SMMEs. So I think that is the challenge mostly faced, I think, by investors, is they have the post-investment support, but actually you need almost the investment readiness support. How do we get you investment ready? How do we make sure you put the right documents in place and have your data room available so that when investors speak to you, you don't have to keep sourcing the same documents over and over again. It's available online. And I think another thing that came up with our community members was really that data room becomes important, because often when entrepreneurs share their information, sensitive information about their business, they lose control over where that information is then going. And if they have to now share this information with 3 or 4 organizations, they start feeling a bit uncomfortable, because essentially it's either their IP or their business know-how is now being shared across multiple forums. So with these online types of platforms, they can then track who is looking at their documents and also manage the permission settings of who and when people should be accessing that information. So I think I touched on 2 things there. I think the one thing is being a lot more collaborative, and it does take investment from a capacity perspective before you start seeing the returns on that investment. And secondly, how you manage data, because like you mentioned, you're going to fill out the same information across 10 different forms, and that becomes frustrating. So you'd rather have it housed in a central location where you control your information.
Great. So, I think David alluded to it earlier as well, that we do need to be innovative as funders. So basically, and we need to come up with these new models to be able to fund SMMEs, because they are different, and traditional funding is not meeting the needs of these funders. So I'm just going to give over to you, Amina, to just take us through some of the alternative funding solutions that are available in the market that you can share with our viewers.
Sure, I'll share with maybe our ecosystem, with some of our fintechs. I think we have a brilliant business called Brighton Capital, and they do provide funding, and it's all online, so I think that's also helpful during the pandemic, is they provide working capital through invoice financing as well as purchase order financing. So that's one option, and you can actually see, what I like about their website is actually if you go onto their forum, you can play around with their calculators to understand what is the repayment term. There's also a company called Profit Share Partners, and they also provide working capital through purchase order funding, and again they look at taking a share of the profit as and when you make that profit to repay them. And then I think I mentioned Funder earlier, but there's also Lula Lend. And Lula Lend, again, is providing, I mean, there it's flexible payment terms, but they require you to have at least 500,000 in annual turnover. And you need to be operating for a year. What I've seen quite a bit of, Yonela, is people no longer sitting back and waiting for doors to open for them. They're opening the doors themselves.
Yeah.
So I want to encourage some of the individuals that may be watching that if you see a gap in financing, maybe you're the one to solve that gap. And that's where I think Alpha Code would come into play, because we could then help assist this business from ideation to achieving the product market fit by providing them with grant funding of up to 650,000 Rand. And we provide support for a year. We provide expert support, like you mentioned, David, which is specific to the needs of that industry and that business, as well as ongoing mentorship, having that sounding board, because entrepreneurship is such a lonely journey. So being around people who can really understand some of the challenges that you're facing. So that's on our space.
Awesome. Thank you so much. Any of the panelists want to add on that?
So I wanted to talk about the funding instruments. David, you spoke about the fact that there's a grant portion to the funding that you offer. That's quite important, because your traditional financiers, even DFIs, tended to focus on the debt aspect of funding and never about the grant portion or even equity for small businesses. That's important because it kind of softens the blow or exposure to raw credit, if I can put it that way, for small businesses. And maybe the second point I want to raise is that funders often do not take into account fluctuations in the market, like even COVID now, they would fund in the same manner as they've been funding. They do not take into account that SMEs have been affected by, market conditions, and therefore the lending practices need to change and sort of adapt to what's happening in the market, the refinancing of businesses, or introducing a payment holiday, or restructuring the debt for that matter, or reintroducing a grant portion to take a small business from point A to point B during the difficult times of the pandemic, like COVID and so on.
David?
No, I think it was well covered by Hlonela and Amina. Yes, I mean, even look at the recent unrest that has been experienced and the response to that. And that requires a different thinking, a different approach, because the environment, we need to have bespoke solutions that can speak to that environment. And I just wanted to add that to your point, Hlonela. And it's about being innovative in our solutions. I personally, and I think the days of traditional finance is over. It's so over, like you cannot believe it, because we're living in an information age. We need to bring in the artificial intelligence, the blockchain solutions, big data analytics, to allow us to make decisions quicker, to match the solution to the need, so that you can then ensure the success. Because if that entrepreneur is successful, that will ensure you recovering your money. But to force them into a specific product, I think that's where we are having this mismatch. For me personally, I think it has gone its term. And we really need to get back and say, how do we respond to the current market environment?
I think it's time actually we give over to the people online. There's a lot of questions online. So I'm going to try to go through some of them. David, you're the first one. IDC.
You must tell them it's Women's Month.
It's Women's Month.
Post it to the women.
Okay. So David, is there another SME funding solution besides an exchange of shares or ownership for a startup business that requires significant upfront technological or capital? This question is from Bongi Matiwaza.
Bongi, I think to my earlier point, it is about, and I've just said it, we need to look at bringing in technology, fintech, look at how we can access artificial intelligence. Artificial intelligence would give you a good sense of whether there's an opportunity within a market. And once you see there's an opportunity, I think it can be backed. But for me, the way forward is partnerships, is strategic partnerships, it's collaborating with one another with this intention of growing and developing SMEs. There is probably equity more in the venture capital space. I think there's still a space for that. Where there's high risk, obviously you would require high return or equity type of return. But also, I think when we talk about developing small businesses, and I'm specifically also want to zoom into township-based businesses, which is also unique. They also have unique requirements, in terms of accessing finance, etc. And it's bringing those solutions to them. And once again, the traditional solutions is not what we have. But equity probably yes, but grants, bringing that in so that we can grow and develop them in the future.
Yeah. All right.
Yonela, if I may also just add to that, I think one of the key things that I've come across with startups is they love to build tech. But tech doesn't necessarily speak to the problem that you're solving for. So I want to challenge any of the entrepreneurs watching today who want funding to build the tech first before they validate that solution with their customers, to really think of low fidelity solutions. And if they could do that, I mean, you can use WhatsApp nowadays. So before we even get to AI or blockchain, really think about how do you use WhatsApp to service your customer first, so that you understand your operational model and the processes that will take to deliver your solution to the customer. And on the customer side, understand their journey, be empathetic to their needs. This will give anyone the flexibility to then make changes along the way, and it will be easier for them to gain traction and attract funding from your angel investors, even potentially pre-seed and seed investors. I mean, that isn't very, very broad in our space, but they're welcome to come and speak to us at Alpha Code around pre-seed and seed. So I think that's the key issue, because once you've built this monolithic tech solution, there's not much room for change. So you've built this big product, it's now in the market, and then guess what? The customer doesn't like it because you forgot the customer on your journey. You forgot to speak to your customer on the journey. And you've raised 2 million rand or however much money, and then what that does is it erodes your reputation as an entrepreneur. Because you've now raised this funding and you didn't deliver on what you said you were going to deliver on. So I would really challenge, if you're unsure around, if entrepreneurs out there are unsure around how to build low fidelity solutions, I really recommend they have a look at the alphacode.club website, or alternatively, look at design thinking principles, look at the business model canvas, and test whether they've got certain, some of those things in place, and speak to customers. Go out there and talk to your customers. That is gold. It's data is the gold, is the new oil. Go and find out information from your customers.
Awesome. I think that links nicely to our earlier speakers that spoke about customer-centric, right? I have a very interesting one here from Hilton that says, we need to consider character-based lending. Now, guys, what is that? How do you do character-based lending? Any thoughts?
It's not, I don't think it's something that's too far away from the future. If we look at a Discovery Bank, I mean, you encouraged to go to the gym and, sign up to your gym, and they see how well you perform, how often do you go into the gym. So I think it's around behavioral analytics in that regard. So I think character-based, if there's an entrepreneur out there who's listening, maybe come up with the solution. Because I think it's just about making sure, how do we understand the behaviors of good entrepreneurs, of sound entrepreneurs who can take a business from start to finish and provide those returns to to investors. The information is available, I think, even for traditional investors to have a look at what's out there. Is it about repayment terms? Is it that they have a good social network? They have mentors in place that they can speak to? I think all of that speaks to about, character. How do you approach business? It just takes, I don't know if all the solutions are available out there as yet, but I do think it's possible in future to build something like that. And it's not too far away into the future.
That's interesting.
Yes, and if I could add to that, I actually laughed because when we engaged with some of the financial institutions, they were actually doing these sort of assessments as part of their credit assessment process. And obviously being interested, I asked this entity why. And actually it makes sense because if you think about it, when you borrow money or invest money into a small business, you're actually investing it into a person,
Yeah.
Exactly.
not really to the business.
Yeah.
And you need to know that characteristics of that individual because it's not like a large corporate where there's internal controls and boards and subcommittees and internal audit, etc., where you can give money to the business to achieve a certain objective. And I think that's what it means. And I think it's so critical. That's about thinking differently, to say, I'm giving money to Hlonela as the entrepreneur.
Yeah.
She might have a business ABC incorporated, but I'm not giving it to them. I'm giving it to her to apply and to make sure that we achieve the objectives. So that is
Interesting.
what that I think comes from.
Yeah.
I want to agree, Yonela, because the character of the entrepreneur, defines the business, and it reinforces each other. And I quite agree. It's quite an interesting dimension, and I think perhaps it's the way to go, especially for SMEs.
Yes. No, it's very interesting. And if I can bring it back to life for SMMEs, something like when you are assessing financial records of an entity and they give you one set of records, you pick up something and they give you another set.
Yeah.
And you're like, no.
happening? Yeah.
Then, I can't even look at this because I know now you're not an ethical person, right? So I do have more questions. I think still around the process, which speaks heavily on access, right? How does the approval process consider the effectiveness of the business idea versus risks on the SMME applying or not complying with other aspects of the application process, taking into account that the SMMEs are afraid to put their ideas on the table as they are stolen by those that are wealthy?
That's loaded.
So, yeah. Amina, you want to give it a shot?
Yeah, I think it goes back. Look, we tell startups there is no such thing as NDAs because it's about your ability to execute on the idea that you have. So you could be worried someone's going to steal your idea, but the reality is you know how you need to execute on the ground. And that is often, like when you're talking about investing in the person's character, that is actually, the value proposition initially is the jockey that you're backing. So I think it also goes back to what I mentioned earlier about making sure they have a room, and that way they can actually control who gets access to the information along the process, and they can see who shared that information on.
Yeah.
So it's a minimal fee often that you do have to pay. There are some free online resources, and when I'm saying a data room, I'm not talking about Google Drive. Because Google Drive you can share and download, and no one has control over you don't have control over your information in that regard. So, I think I'm just gonna leave it there.
Leave it at that.
And I don't want to shut it down, but I think there's a genuine concern, for smaller guys who cannot afford to register their patents or their ideas, etc. And, we have to be alive to that. And that is why the IDC also have a program called KEEP. It's a Huebo Innovation Partnership Program. They can go onto the website where we really listen to their idea, innovative idea, establish whether it's innovative enough. We've got funding available so that we can get them to sort of register that and get it, at least have some level of ownership. around that. But at the end of the day, an idea, I always say there's dreamers and there's doers, you know. And yes, and it's the doers that get things done, you know.
Sure.
My kids always laugh at me when they say, Daddy, when something opens up or happens, they said, you told us about this a year or two ago. I said, yes, I'm a dreamer. Those guys are doers.
Yeah.
So it's about doing, it's about executing,
True.
it's about getting it done. And those are the successful entrepreneurs.
Yes, thank you so much. So I know we do have a poll question which will actually win you the grand prize. And I don't know, are we ready? Okay, so the question is around something that one of the panelists actually spoke to, which was around the credit, the gap in the SME market in terms of credit that's available to SMMEs. And our options are 1, or you're going to put it on the system? Yes. On the poll, please answer that question. Fastest hands will win the grand prize valued at 25,000 rands. So that is great. In the spirit of Women Month, right? And, you know, happy Women's Month to the ladies on the panel. David has been wanting to say it. You know, what are we doing in terms of funding women-led businesses? What are you seeing in the market? What is available for women? You know, I do know in IDC, I've seen that, you know, you sort of set aside funds because this is still a very untapped sort of field. So what are you guys seeing in the market? What is on offer for women-led businesses for financing? I'll give over to Amina, because already David is looking at me like, don't start with me, please give it to the woman.
Sure. I think, you know, for me, one of the issues before we talk about investing in women is looking at the female investors. You know, if you look at the continent, there's about 11% of private equity, you know, companies have senior female representation. And what they found is when there is more balanced gender teams, they perform 20% higher on their net IRR. So there's something to be said there. Is it that most times when women go out for funding, they are overlooked? And there was a study that did show that all male-led teams are 4 times more inclined to raise funding than a female-led team. And that's because representation is not there. You know, it's very hard, I think, to be heard in general as women. I think this is why we have Women's Day, to bring awareness to these issues.
Yeah.
So as a female entrepreneur, your way of communicating is so different to, I think, the other gender more often than not. And unfortunately, where we or hopefully this will change in time, where we source our capital from, it's still very much entrenched in male networks. Deeply entrenched male networks. And the thing that women need is access to network. Before you get to capital, it's how do I enter the door to speak to the right people who will understand the problem that I'm trying to solve for and understand my way of communicating so I won't be overlooked. So I think there's a number of things to address in that. I think it speaks to representation. Having broader representation means there's someone who has a sense or a lens. I can't get the right wording, but it's more that ethos of understanding the challenges that you have to overcome in your industry and then investing in you. And I wish that if we see that change, we'll probably see more access of funding available to women-led businesses. But there are organizations that do a good job of that. I think IDF has done a wonderful job with I'm in Accelerator, which was open. They had a woman angle only. And I think that's what we need to see more of. We need to go out on a limb and do more of that work. Yes, exactly.
Okay.
No, certainly, and I think the IDC's stats and information is there. I think we do it because it's the right thing to do.
Yes.
It's not because we want to achieve. It's actually now entrenched in our processes, you know, to really fund women-owned businesses and be more specific in black women industrialists. That is a gap that is in the market now. We tend to see many women entering, but more in the retail space. I heard another term, lifestyle type of businesses, etc.
Yeah.
But we need to get women elevated to where, to the heart of our economy, so to speak. And we are intentional in funding and financing black women industrialists. And I think that is the gap that we are focused on as the IDC. And on our website, you'll be able to see, the impact that we have made. And we've made some significant strides, I think over 3 billion in the last financial year that we've invested in black women industrialists. And that is the sort of traction that we need to see if we need to make an impact in that sector.
Thank you so much,
I want
David.
to say that with respect to that, the more things change, the more things stay the same. You mentioning about IDF, and actually when I think about it, it's the only funder that I know that is dedicated to funding women-owned businesses. So there is a gap in terms of funding women-owned businesses, and we know that there hasn't been growth in the SME sector in the past decade, and it has stagnated, and the biggest casualties are women-owned businesses who've fallen by the wayside. It would be quite interesting to look at the stats on the back of this COVID pandemic, what has happened. But we do know that, women become the biggest casualties.
Yeah. So, we've spoken about the problems. What can we leave the audience with in terms of how to break down these barriers to access to finance? How can they make sure that their businesses are funding ready? What are some of the things that you are seeing that some people are doing particularly well, and they can take home and actually just make sure that they have that in place and they can access this funding that is apparently there? David.
Me, I'm still trying to think of the word.
Okay, we can give over to Amina.
But I think it's about being persistent
Yes.
and not giving up.
Yeah.
We know we still, you have to deal with what we've just said. I'm not going to repeat everything. But I want to encourage them to not lose hope, to remain persistent. They've got this vision, they've got this dream. And somewhere, somehow, things will open up for them. So don't give up hope, remain persistent. That's the word I was looking for.
No, that's a very good word, because it also speaks to a lot of the comments where people are saying, you know what, we are so glad that funders see that, there's the traditional way of doing things is no longer working. So we're glad that you are seeing that. And because, this one person is saying, because there's so much red tape, we then give up.
Yeah.
We don't go for the funding, which means then, the business is gone. It can't scale, it can't, go forward. So that is a very good word. Thank you, David. Hlonela?
I can't overemphasize the issue of networks enough.
Networks.
I think that's the biggest thing for access to markets and for access to finance. So that is the key. And so with my experience having been in the ecosystem for as many years, that's what is working in my favor, basically. I can pick up the phone and call anyone in the ecosystem, whether it's corporate, whether it's a DFI, whether it's incentives at DTI, whether it's amongst other entrepreneurs that I have assisted when I was in the system. Networks.
Excellent. Thank you so much. Amina, your last thoughts on that?
Yes, I think, a stat that I think Ernst & Young did this global survey before that showed that only 20% of women would not be capital raising. They're not interested in capital raising versus 3% of men. So already you can see the difference. And I think the challenge is because women want to have things in place and they want all the answers and they want to try and test, and before they go out there on a limb to say, I don't have everything in place, might not have all the answers, but I'm willing to take the chance. And I think it's just the one piece of advice, just go out there, put yourself out there, and keep doing it. You know, I think we're afraid of rejection, we're afraid of hearing no's, but it's in those no's there are lessons to be learned that help prepare you for the next session. And I think it's also up to us, you know, on this panel to allow for the platform to say, we can help you where we can, get in touch, if we can open those doors. And I'm not just talking about us. I think any woman who are in a position, I think like we mentioned IDF earlier, it's because it's a female-owned and managed fund. And with that lens, it means we need to take up these spaces and make it our responsibility to also open access to network through our own networks for those that put in the work. Because it's not as simple as you show up, I have an idea. No, you have to actually go out there and form yourself and educate yourself, put in the work, and on the other end, you more often than not are going to find someone who's willing to help you bang on those doors to get that funding.
Thank you so much. So we do have, I'll just read 1 or 2 comments. Mentorship helps you to shape your business. It will assist in realizing your vision and step-to-step operations. So I think that speaks to, you know, your networking and the mentorship we spoke about. And there's the last, no, that's fine. The specific questions that we cannot answer on the webinar, we will try to answer outside of it. I don't know if we have the results for the poll for the grand prize. Okay, Ntsiki will announce the grand winner for that poll, which is the prize valued at 25,000. Thank you so much, David, Hlonela, and Amina, for joining us today. It was very informative, and that's echoing the sentiment of also the people online. And thank you so much.
Thank you for having us.
Thank you to Cecil.
Thank you.
Yeah.